This is John Grover. It's November 1st, 2018, and we're going to do a market update. So the S&P has rebounded strongly off of an area of support within this pullback that we had earlier in the year. Let's look at what the indicators are showing us now. This green indicator down below has dropped below this red line, which of course it has before. Usually we get this sort of rally that we're getting now, and then we have a pullback. Sometimes it gets to a new low and sometimes not. Here are two pretty perfect examples before. You can see it here. You can also see it here. But let's go look. Notice these the red and the green line below. We're just going to go back in history and sort of look at what happened. Same here, right there. Basically, it's sort of the analogous situation to what happened at the top. We knew that the top was an extreme momentum, i.e. this fall down that we've just recently had is an extremely strong momentum to the downside. It pushed the indicator below this red and green line, and therefore we expect a little bit of more action to the downside after this little bit of a rally that we have. Here's another example here. Anyway, many of these, obviously when we're in a bear market, we stay in this low momentum situation, whereas when we're in a bull market, we're generally above this area, as you can see in this section here. So just once again, using history, there's the sort of the bull market setup. The minute you have a break below, as we have where I'm marking it here, let me get the proper tool here. Once you get a break below the red line, notice you have a strong rally and then a pullback. In this case, it went to a new low, but I don't know whether it will this time in history. But I believe we'll have at least a touch of close to the old low of 2601, maybe down to 2553, and then we'll rally. So the next question is, will it hit a new high? I believe that there is some indication on the monthly charts and the longer term charts that we will hit a new high, at least in the NASDAQ, if not the S&P and the Dow. I put this big red arrow here to remind you that what is going on is part of this topping process. Whether you got out here at 2930 or get out here at 2601 or somewhere in here, it is time to begin to think about taking profits from 2009. Alrighty, next we'll look at bonds. Bonds are continuing in their downtrend. They've had a little bit of a rally in the last week or two, but I expect them to fall below the 136.28 support, bounce around a bit, and ultimately make it down to this 127.23 level. Obviously, in the longer term, this does not make a huge bit of difference to the extremely long-term uptrend, and at that point, it may be a buy somewhere in there. Does that make so? Indicators here are similar to the stock market in that they are bouncing, but at a resistance spot that implies that we'll get a little bit more of a breakdown soon. Gold has been strong. It did hit this resistance level we talked about last month, and it actually hit the second one. It's behaving as if it's going to make it all the way up to this 1287.3, basically the strong rally today. But in general, I expect a fall down this lower line of 1130 area. Once again, indicators are giving me that impression. Note here, we'll mark a few of these situations. Here's where the indicator is currently at this level, and you note that the rallies that hit those levels tend to be tops pretty accurately, especially when they come from such a strong negative set of momentum. So once again, be cautious about gold. Be aware that it's probably going to pull back at least some, if not all the way to a new low within that. Thanks again for watching, and I hope you enjoyed this. And please click like if you like it. And of course, subscribe to the channel if you enjoy these videos. Appreciate it.